Welcome back to Halftime Report. Joining us now is John Reid from World Gold Council. He's the market strategist at Europe and Asia. John, I thank you so much for joining us. And first of all, we have seen all-time high gold prices for the month of August. And would you say that the 25 basis point rate cut has been factored in right now, and the markets are perhaps looking at further development or event?
It's very clear to me that we've seen a lot of expectation of Federal Reserve interest rate cuts come into the market, particularly in the last few months. So the whole world expects the Fed to start cutting rates in September, and for that to be the start of a process that will continue for quarters and maybe the year to come. Now, normally, interest rates, an interest rate cutting environment is very good for gold. And that could be the case, particularly if the US dollar weakens. The only concern that I have is that we've had a lot of anticipation of that in the market already. And high prices have started to have an impact on certain segments of the gold market, particularly on jewelry demand, which we saw weaker in the second quarter already because of high price increases. So I think the market's finely balanced here. First of all, the Fed has to deliver rate cuts, otherwise I suspect we'll see a correction. But even if we do see rate cuts, there may be limited potential for gold prices to trade higher.
John, as you said, that the jewelry demand is a bit of a dampener here, but the world's central bank buying has been quite strong. Record highs actually in the last couple of years. Also, would you now see investment demand increasing? Because you're looking at 22% of gains in gold for this year, and the ETF buying seems to be returning too.
Well, I think you've hit upon the really important topic there, and that is of the purchases by exchange-traded fund investors. Over the last 3 years, we've seen slow, steady outflows of gold held by exchange-traded funds, particularly in North America and Europe. The only area we've actually seen inflows in ETFs recently has been in the Indian and Chinese ETFs, but that's showing signs of beginning to turn around now. If I look at the potential for ETF investors to return to the market, that could be the missing ingredient to see gold trade higher over the next few quarters and maybe the next year or two, simply because they've been absent from the market. Now, other aspects of the market have been really strong, such as central banks, as you've mentioned, and there is some signs of slowdown in terms of central bank purchases this year, particularly after China stopped disclosing increases to its holdings in May. So we will probably see strong central bank buying this year, but not quite as strong as we saw in 2022 and 2023. So something else needs to come to the party. Emerging market investors, emerging market consumers of gold have bought a tremendous amount of gold in the last few years, and most of that strength will continue. But really, we need to now see Western investors return to the market. And I guess the key ingredient for this is going to be interest rate cuts and slowing economies. Of course, if we get a recession, then all bets are off, and I would expect to see gold attract much more in the way of Western investment. But even in a bit of a slowdown, which seems to be priced in at the moment, I think we can see more Western investment buying.
And those numbers clearly seem to be coming in already. What's also your sense, John, on India gold imports, which are at near record high prices right now? Do you see an impact on that number?
I mean, there was no doubt that higher gold prices were having an impact on jewelry demand in the second quarter. But then, of course, the cut in import duties that we saw last month have reignited interest in gold. And from what I understand from speaking to my colleagues in the World Gold Council office in India, plus we're talking to people on the ground here, jewelry demand and purchases from the gold industry is really strong at the moment. And I think that has the potential to not rescue, but certainly reflate the import such that we end up with a decent year this year again.
All right, so a good number this year again. But when you look at the global markets, John, and there are geopolitical events which have impacted gold prices, what also is your take on de-dollarization debate? And that in turn also has been supporting gold buying, by the way.
There's been no doubt that the geopolitical events have caused short-term boosts for gold, particularly when they have come out of the blue against expectations. Typically, though, that benefit that we see in the gold price from an unexpected geopolitical event is fairly short-lived. Look, I'm sure in the background of people's minds when they're buying gold, they are aware that we're in a more risky geopolitical environment. But I don't think it's the main reason why people are buying gold. I think there's other reasons for that as well. And of course, potentially the biggest geopolitical event that you're talking about, sorry, you haven't spoken about, is the US election, which takes place in November. And that's very finely balanced at the moment with the potential for some quite different outcomes depending who wins. One thing that is for sure, though, is that very large fiscal deficits in the United States and a growing stock of more expensive to fund debt is becoming a big issue. And I think this is one of the biggest drivers behind investment demand, particularly from high net worth individuals and family offices around the world who are really getting concerned about the levels of debt and deficit in the United States. I don't see either candidate, when they're successful, changing that trajectory.
Fair point there. John Reid, thank you so much for joining us on making sense of various events around the global markets and how gold really seems to be taking support from all of that and more chances really of gold prices going higher from where we are at this point in time. Thank you as always. And with that, that's all the time that we have on The Current Show, but Business Lunch will take all the action forward.